Hi guys, in this video we are going to discuss about the order flow, COT high and COT low, how it is calculated and how to take advantage of this in your intraday trading. So in my previous video we had discussed about order flow COT. So in this video we will be discussing COT high, COT low on that. So before going into this order flow, COT high, COT low, so you can join my mentorship program in market profile and order flow. These are a little bit deeper subjects. So in this mentorship program, we'll be going through in-depth order flow and market profile subject, and you will have a complete picture how to use this in your intraday trading. So it takes a little bit of time to become good at it. So it's not that the moment you understand the concept, you will get to know, and from the next day you will start trading. So as you know, trading itself is more of applying it in the live market. So what we'll be going through in this mentorship is that experience. Whatever I have learned, or you will be going through, whatever the issues you will be going through, we'll be discussing and we'll be trying to overcome step by step. So that is what will be happening in this mentorship program. It's a totally one complete year advanced program. So if you are really interested, and if you want to become a good intraday trader, you can contact me on the number which I have attached in the below description of this video. So now we will go into understanding the COT high and COT low. So before going into this again, COT high and COT low, we need to understand three things here. What is COT? What is delta? So after understanding the COT and delta, we can easily understand what is COT high and COT low. So what is delta? So delta is nothing but the net difference between the buyer and seller. So what does it mean? So let's say this is a candle. On the left side of the candle there are 10 sellers, and on the right side of the candle there are 15 buyers. So whatever you are looking at on the left side of the candle is nothing but the aggressive seller. So we have two types of market participants again, aggressive and limit, right? We also call them as market and limit, right? Market is nothing but the aggressive people, limit orders are nothing but the normal, right? Who keep the prices, who want to purchase when as the prices comes to their levels. So here we are understanding this is an aggressive market participant, who is aggressive seller to be exact. So this is also a limit buyer. But we don't want to go into this. It will totally take us away from the what we are discussing. So for now, assume that this is a aggressive seller, and right side is nothing but the aggressive buyer. So the net difference. What is the net difference between these two? It's 5, right? There are 5 aggressive buyers more than the aggressive sellers. If the aggressive people are who are responsible for price movement, we take this, we give importance for the aggressive people. So here there are more 5 aggressive people, so it's a bullish candle. So the likelihood the prices might further go increases. So the delta will be positive 5, right? Let's say suppose same candle, on the left side we have 15 aggressive sellers, and on the right side you have only 10 aggressive buyers. So here more sellers are there. So the net delta will be minus 5, which means more aggressive sellers, 5 aggressive, more aggressive sellers are there. So this delta and cumulative delta, COT and all, I have discussed in a separate video, previous video. So you can go through that in a detailed manner. So for now, this basic understanding of what is delta is important to understand what is COT high and COT. And also we need to know what is COT. So what is COT again? This is a candle again. So you have multiple areas, volumes, right? So a order flow candle is nothing but a volume profile with volumes on the candle itself. So this is various volumes are there. So here let's say 10 volume is there, here 12, here 30. 30, here again 12, here 10, so on and so forth. So if you take the whole candle, where is the huge amount of volume? It's here, right? When you combine the left and both, this is the area where maximum volume is. This we call it as COT, commitment of traders. This is where the maximum traders have been committed. So based on how the price is closing or the COT where it is, based on that we try to understand where the market might head, where the support and resistance is there. What is COT high, COT low? So traders committed as the prices is making high or lows or new high or new lows. What is COT high? Traders committed from the high to the current price, means below that, below the high. So COT low. Traders committed from the low to the current price. Current price, it has to be above the low. Right? So we'll understand here. So this is one scenario to understand what is COT low. A point, B point. So let's suppose this is a total 5-minute candle. So before forming this 5-minute candle, this is how the price spent. A point, B point, C point, D point, E point. This is where the prices have closed finally. Now, from this low point, assuming that this is the low, in the next there was no, after opening there was no low. From this point to this point, we call it as COT low. Right? The whole A, B, C, D, we call it as COT low. So, what is COT high? Now, this is the highest point. E point is the highest point from the current price. This is the COT high. Now, the reason is this is also a COT high. So, if you take this as individual thing, right, from this point to this point is a COT high. But since this is the total candle, 5-minute candle, we are not taking this. We are taking from the highest point to this one, current price. So if you split this 5 minutes into 1 minute, then you will see this will be the COT high. You will see COT high here. You will see C from C to D, COT high here. E to F, COT high here, separately. Now, what is happening when the COT high is forming? More amount of sellers are pushing the prices. So when the prices are making high and the prices are coming down, the prices are being pushed by sellers generally, but not necessarily. But generally, when the prices are making lower lows, here it's assumed that the COT high has to be negative. What is happening when the prices are making higher highs? Right? Buyers are buying continuously. So it is assumed that the COT low has to be, as the prices is making higher highs, the COT low has to be positive as much as possible. Right? One more thing you need to remember is, so we discussed this from here, this point to the current price is the COT low. Now this is 5 minutes candle. The 5-minute candle has been over. So in this 5 minutes candle, if you look at in a split wise, from here to here, let's say you are taking 1 minute candle separately. From here to the current price, let's say the closing is somewhere here. This will be the COT low. So from this to, again, this will be a separate COT low. So like this, it goes on. So let's say the 5 minutes is over, and in the next candle, the prices have opened somewhere here, and straight away the prices went up. So this also becomes a COT low, again, separate, right? From this point where the prices have closed, there was another candle, 5 minutes candle, which started and closed somewhere here, suppose. So this will be the total COT low. Here you will see some X figure. So let's say if you combine this two as a 10-minute candle, then you will see the whole from this point to the current price, where the prices have closed here. To make you understand here, I came up with a small calculation where I have taken this first 30 minutes as an example. From Tuesday 17th, I had divided it into 15 minutes. So in 30 minutes, we have 15 minutes and 5 minutes. So with the same thing, I came up with the same number. So just remember this number. COT low is 7310, 7.31K, which means 7310. So again, COT high is 180, right? This is where COT high is there. So if you go into the next slide, we have 215 minutes, these are 215 minutes. So how do I calculated this? So 4330, the COT low of the first 15 minutes, that is nothing but this one. Where is this? 4330, right? 4.33k is nothing but 4330, and we have in the next we have a delta of 3k. So to be exact, it's 2.98k. It has been rounded here, right? So 2980. So if you both calculate this number, we get 7310, which is exactly the COT low of the whole 30 minutes. And we also have here 5 minutes. So this is what 5 minutes. So up to this, it has formed the first whatever we have seen in the first slide, 30 minutes. So all these 6 candles forms the 30 minutes of this Tuesday, first 30 minutes. So in the first we have COT low here, COT low of 973. So this is the COT low, and we also have the delta on the second candle, 1030, which is this one, and we also have delta of 2330, which is 2.33k, and we also have delta of 2490 here, 580, and here good number, some 88 sellers are there. So if we calculate all this, so add all this and subtract this 88, since these are sellers, we get the 7315, which has been rounded as 7.31 by the system. So this is the calculation here, and we'll go into COT high. So here the COT high is 180. So in the same fashion we'll come. So this is the highest point in 30 minutes, right? So let's see. Here I have taken 5 minutes. So this is where the highest point is there. So this high is very little higher than this point, previous high. So this is the highest point, and this is where the prices have closed. So look at it. So this is the highest COT high, 268 here, and what we do here, we have a delta of 88, minus 88, means sellers are there. Since we are calculating the COT high here, this is the high, and from this high point to where the current prices have closed, we are minusing this 88 delta from the previous number, right? 268 COT high. So now we get 180, which is exactly the number of COT high in this 30 minutes. So now 474 COT high is there here. If you want to get this 474 number, you need to divide this into 1 minute chart. So you go to the 930 chart where the candle opens, and you calculate. You take the COT high of the first 930 minute and you plus it continuously, plus or minus based on how much delta is there, and you will get the same number. How much? This one, whatever it is, 474 to be exact. So you will get the number. So on and so forth, the candle goes on, right? As the prices are going higher highs, the prices get calculated. So let's say suppose the prices starts coming down like this. So what will be the COT low again? The COT low will be resetted from here. So let's say here the 5 minute candle ends, and from this point, so since the prices are going down, generally the COT low will be negative. So in a bullish trend, the COT low has to be as positive as possible. That tells us that there are enough number of buyers who are pushing the prices upwards, and the COT high has to be generally negative. Sometimes it will be positive also. So as the prices are making lower lows, the COT high has to be negative, as high as possible. That tells us the total number of traders committed from high point to in pushing the prices downwards to the current price, we will come to know. So the COT low has to be as the prices is going up. It has to be generally positive, but this is with the COT high, COT low. It's better not to trade totally depend on this. So include along with this COT low and the COT high, COT, other the delta. So of course delta itself tells a COT low and the delta. It's more or less you can see either of one. So one is more than enough. So if you can include imbalances or some unfinished businesses or something like that, delta divergence along with this COT low and COT high, your probability of being successful in the trade increases. So this is it, guys, regarding COT high and COT low. You can join my Telegram Delta Trends also. So if you have any queries, just let me know in the comment section. I'll try to address as soon as possible. Have a nice day.